Hello friends and welcome to this video of Accounts Made Easy. So continuing with marginal costing, today in this video we are going to discuss a few questions of marginal costing, starting with the very basics or the simple question. So let's look at the first question that we have. The first question says, find the amount of variable cost from the following information. Now the information that is given to us is sales, sum figure, fixed cost and profit. We have these three pieces of information. If you people happen to remember the fundamental marginal costing equation, which we simply call as marginal cost equation, that says sales minus variable cost is equal to fixed cost plus profit, right? Exactly, this is what is given to us in the question. Now what we need to do is we just need to substitute the figure. Let's check them. The figure for sales given to us is 2,85,000 minus variable cost. That's the missing information. So we'll just write here V, which will be equal to fixed cost, which is 50,000 plus profit, which is 60,000. All right. Now simple mathematical equation, we get variable cost is equal to 2,85,000 minus 1,10,000. All right, which gives us the value as variable cost is equal to 1,75,000, and that's our answer. We have got the value of our variable cost for the given question. Have you understood this? Guys, couple of things that we need to learn from this particular question is, if we are good with the formulas, we remember our formulas. Marginal costing is all about implementing those formulas, nothing beyond it. So try and practice your formulas as much as you can. Now this is done, so let's look at the next one. What's the next one that we are getting? The second formula that we get is, it says given that fixed cost. Now what is this saying? That fixed cost is 7,000, profit is 3,000 and sales 50,000. What we need to find is PV ratio, a comparatively very easier part. PV ratio is equal to, if you remember the slide where we had learned the formula for PV ratio, there were multiple of them. It started with contribution by sales into 100, and the very next one was fixed cost plus profit by sales into 100, because we understand that fixed cost plus profit is equal to contribution. That's the formula we are going to use here. It says fixed cost plus profit contribution by sales. Okay, this is then to be multiplied by 100. Sorry. So if I just substitute the numbers here, my fixed cost is 7,000. To this I would need to add my profit of 3,000, and then I multiply that by 100. But before that I need to divide it by my sales, which is 50,000. Okay, so if we look at this equation carefully, what we get is 10,000 divided by 50,000 into 100, which we all understand that by pure common sense or mathematical calculation, the answer for PV ratio what we are looking at is 20%. And that's the value of PV ratio what we are looking in this question. Again, there are two ways of doing it. One, either you use this formula which is already done, I have put this here, or what you can do is you can write contribution by sales into 100 and calculate contribution using fixed cost plus profit. However, that becomes a little longer way. Why do that when we can simply do it? All right, so I hope you have all understood this. Time for us to move to the next question, question number 3. Let's see what it says. It says calculate break-even point, that's our BEP sales, from the following particulars. Information given as fixed cost, variable cost, selling price. This is where we need to understand. Look at these two things carefully. They have told us that variable and selling prices are given to us, which means it becomes easy for us to calculate our contribution. So in such a question, when we are calculating BEP, remember we are going to calculate that BEP in units. Okay, I don't know whether you people remember still this or not, but if you people happen to remember, I have told you people that if you want the answer in units divided by contribution per unit, if you want the answer in value, that is in rupees, you need to divide it by PV ratio. So here we are going to find our BEP in units by applying the formula. I hope you people remember the formula for calculation of BEP, which is fixed cost, which is then to be divided by contribution per unit. Okay, this is the formula to calculate our break-even point in units. Fixed cost is given ready-made to us, that's okay. We don't have contribution, so let's first calculate contribution. Contribution is equal to sales minus variable cost, and we have this information. We have that sales, which is 21, minus our variable cost, which is 16, which gives us the value as 5. So we understand that our contribution per unit has now come to 5 rupees. Simply applying the formula, what we get is, if we just have to calculate BEP now, the answer will be fixed cost, which is 3 lakhs, divided by 5 rupees, which is contribution per unit. And the answer is 60,000 units. We get our answer as 60,000 units for BEP in units. Again, what I have been telling you from problem number 1 till now, it's almost the same, guys. All we need to do is remember the formulas, implement them, and that's it. The job's done. Right? 3 questions, 3 calculations we have done. Time for us to have a look at one more question in this particular session. So let's just have a look at the next one, which is our question number 4. And the question 4 says a company's turnover in a year. Guys, remember the word turnover means sales. Okay, so company sales in a year was rupees 50 lakhs. Now, because the information is given in lakhs, we will ignore the word lakhs. Let's keep it to 50. And its profit was 5 lakh. Let's also write this down. Profit as given to us is 5 lakh. All right. And they have also given us information about PV ratio. And the amount of PV ratio is, the PV ratio is 40%. Oh, that's good information. And then what we need to do is we need to calculate BEP. In such kind of a question, I always suggest first write the formula for what you need to calculate. Right, any guesses? BEP in what? Units or rupees? Exactly, BEP in value or rupees. The reason is this. PV ratio is given ready-made, so it becomes easier for us to calculate. Okay, if we look at the formula for BEP in rupees, what we get is fixed cost is to be divided by PV ratio. All right, fixed cost not given anywhere. What to do? Simple. What information we have? We have sales, profit, and PV ratio. First thing, we can calculate contribution. Contribution is equal to, if you remember, multiple formulas to calculate contribution. What we use here is sales into PV ratio. Okay, so what's the sales that we have? 50. And the PV ratio that we have is 40%. Oops. Which naturally means that our contribution is going to be 20 lakhs or 20. We have already got our contribution. One more formula for contribution, if you people happen to remember, is contribution is equal to fixed cost plus profit. Yes, I hope everyone knows this, right? We just implement this here, that 20 is my contribution, which is equal to my fixed cost, which is missing, plus profit 5 lakh. They have already given us here. We already have our profit of 5 lakh. So let's add this here, 5. In simple words, my fixed cost is equal to 20 minus 5, which is equal to 15 lakh. That's it, guys. If you check, we have got all the required information to calculate our BEP. Let's calculate our BEP here so that we have the complete answer on the same screen. Now, what we get is, I want to calculate my break-even point in rupees. My fixed cost, what we just calculated, is 15 lakh. And this I need to divide by my PV ratio, which is 40%. Okay. And if we do simple calculation here, this is to be multiplied by 40%. Sorry, divided by. We get 37.5 lakh. Of course, here it is in 37.5. So we can write here that BEP in rupees is equal to 37,50,000. And that's it, guys. We have got this answer as well. All right, so see, what we have done is we have tried to do 4 different questions in this particular video today. That's all that we will be doing it for today. In the next class, we'll be solving a few more questions. However, remember, you need to practice this. And to practice any kind of a question in marginal costing, our step 1 is learn the formulas. Be good with them. Don't by heart, understand them. All right, so that's it, guys. See you all in the next video again. Till then, take care. Thank you.